with a market clarity update for the month of February 2021 for the Santa Clarita Valley. And last month, we continued to see ongoing pressure among home buyers to buy homes amidst a scarcity of active listings. The market's been characterized by multiple offers, bidding wars, if you will, and sellers getting unprecedentedly high prices, as we're going to see in a few minutes, for their homes, as homes are being bid way up over asking prices. By the way, in many cases, the appraisers seem to be going along with the increased prices as well. Buyers are interested in buying because of the low interest rates and because of a change in preferences for lifestyle. This is driven by COVID-19, of course, where work patterns changed, people working remotely from home, schooling changed, people educating their kids from homes, needing to vacation homes, doing the recreation from homes. So the meaning of a home has taken on a whole different dimension than from before COVID-19. We do have a scarcity of listings, as we'll see shortly. I think this is going to change as we get into the spring buying season and as the uncertainty caused by COVID-19 starts waning and we start resuming a more normal pace of economic activity and social interaction. I'm going to share my screen to go over a few slides with you. So this first slide talks about home price forecast for 2021. These are various agencies and firms that do home forecasting. They're nationally recognized. They're looking at an average of 5.9% overall. The range is 3.3% from CoreLogic to 10.3%. And this is the home price forecast for the year 2021. As I mentioned earlier, interest rates have changed. They're starting to creep back up. We hit a low around January 7th of just under 2.7%. And that's crept up about 25 basis points or a quarter of a point, percentage point to 3.02 as of March 4th. The increased interest rates may stimulate more demand as people start feeling under pressure to get into a property while they can at a low interest rate, although at the same time, it might take some marginal buyers out of the market. I'm going to go into some slides on the local Santa Clarita Valley market. This first slide is the active listings as of the month of February. These slides, by the way, are all 3-month aggregated data, and they are split between the active and, I beg your pardon, attached and detached homes. So the blue is the attached, the red is detached homes, and of course the brown is both categories put together. And you can see from this first slide, which is active listings are down 31.9% overall from the same period for the prior year. And then that year was down 37.9. So if you put those together, you can see that we're down over 50% of number of active listings that we had just 2 years ago. The 322 compares with about 389 as of today, when this presentation was made. So active listings probably are starting to come back up as we get into the spring buying season. The next slide is the number of pending sales, and you can see that the pending sales are actually up. So active listings are down, pending sales are up 8.5% over last year. Closed sales are up over 1,029. Are up to 1,029, 25% over last year. And that was, I beg your pardon, 39% over last year. That was 25% higher than the year before. So there was a lot of interest in buying homes. We closed just under 3,000, I beg your pardon, under 4,000 homes for the calendar year 2020. So it looks like we're on track to meet or exceed that at this pace of sales. So you can ask yourself how can active listings be down and pending sales and closed sales be up? And the answer is in the pricing and days on market. So you can see here that prices are up 12% this year and 8.6% the prior year. Compounding these two together, we're looking at about a 22% increase overall over the last 2 years in median home prices. Days on market has fallen off a cliff. They're down 69.6% over the prior year, which is down from its previous year by 34.3%. So 2 years ago, we were looking at 35 days between the time a property is actively listed and the time it goes into pending status. And now that has dropped from 35 days down to 7 days. And I can tell you anecdotally that homes are just flying off the shelves. Inventory, month supply of inventory is down to less than a month. It's historic low levels. Anything less than 5 months is considered a seller's market. At 0.9%, we are at an historic acute seller's market. And you can gauge that by the increase in median prices over the last couple of years. Lastly, I'd like to talk about the impact of median sales prices since 2008. And this slide is a month-by-month change in the median sales prices going back from January 2008 to February 2021. This came in about $710,000 for a single-family residence and about $650,000 overall. Condos came in around $440,000 the median sale price. So you could see the impact that this acute seller's market has had on pricing. We expect that to moderate, as I mentioned before. I expect median prices for this current year to come in around single digits, 5-6%.